Let's start with Bidvest. And to be fair, Bidvest is an industrial conglomerate which Brian Joffe built up piece by piece, brick by brick over a good few decades. Although it's at the point now where it looks as though it's going to be split into two parts, so we're going to talk about that in a minute. But one of the pieces is a vehicle distribution and retail business, which is traditionally the McCarthy motor retail operations, which he bought out of the jaws of insolvency. I think at some point, you know, Brian Joffe is good at finding bargains. The overall Bidvest group, though, has got a market capitalization of 121.7 billion rand, so it's a real big cap. Dividend yield of 2.66, price to earnings ratio of 18.17. So just update me, that split is definitely going to happen, is food services and other?
Yeah, I think what happened was there was first the restructuring, and then following the sort of successful restructuring into those separate operating entities, now they've publicly announced that they plan to split the business into two. The food services business and what they're calling the industrial businesses, which is really South Africa
And they've already
focused.
separated the management team. Apparently Mr. Joffe, who's going with the food services business as executive chairman, has already relocated to a different office. And the balance of the investment operation still remaining in Melrose Arch. And that gives you all of the other stuff that they earn.
That's right, the South African industrial assets. So you've really got, I think, what is the food services business has been driving the growth. That's very internationally diversified.
Big European assets, Australia,
that's
Asia.
right, so quite attractive. Obviously more of a rand hedge type play there, whereas the South African industrial assets are much more focused on sort of the heartland of South Africa, including the motor retail, which will become a bigger portion of that part of the business.
So what do you think people ought to do? Let's look at the share chart while we have this conversation. Do you think there's a value unlock that's going to come through in this exercise? Certainly looks as though people have been enjoying the rise upwards there.
Yeah, so they've Bidvest in particular has done a good job of diversifying their business, sort of by business line and geographically as well. So it has been considered something of a rand hedge. Obviously, that's bolstered it, but it does also have a lot of South African assets, so it's sort of balanced in that way. So I think the sort of rand hedge element until recently has been bolstering the share price as well. Obviously, the actual announcement of the split has kept the share price high, but from our perspective, it's got a fairly high rating. In the recent results, the South African business not doing that great, the offshore obviously doing a lot better, so it's quite balanced, and we see it fully priced with the news out there.
Okay, so just help me what that means. You think you should buy them now, and then when they split you should hold both pieces? No,
so what we're saying is actually the sort of value unlock as a result of the split is actually fully discounted in the share price.
So it's a bit Johnny come lately to buy them now.
And I think what the market's a little bit concerned about is obviously traditionally that food services business has been the growth engine, has been very attractive. Sort of South African industrial assets, especially at this point in the cycle, less attractive. So unfortunately what may happen is as it splits, you could get quite a big overhang on one part of the share.
Just remind me, the food service business, I can understand that, I like a lot. But the rump is a whole bunch of things. It's the stake in Adcock Ingram, it's the travel business, it's the banking operations, it's the vehicle distribution stuff we talked about now, all sorts of security businesses. There's another one that I'm missing that I'm thinking that they've taken. Of course, did I mention Adcock Ingram? So they've got that thing as well, which is sort of unresolved. It doesn't really clear what they're going to do with that. I'm thinking, the way I'm sitting here, that when they do the split, the day after I'm going to sell the industrial assets and hold on to the other stuff.
Exactly. So, and if you hold it before and you're going to obviously get the two parts, that will be maybe come a bit lower than anticipated, and actually, you know, the sum of what you get may have been less than what you had beforehand.
Yeah, so that's a bit of a caveat.
Yeah, so
what are you thinking, hot or not now? I mean, it's a stock we own in our portfolio. It's been a bellwether. It's been super for us. Look at that growth.
Yeah, so I think what you have to do is do your homework and say what is fair value for the two parts of the business. So when you do get both, you know, if it's maybe higher than it should be or lower, so you can either to add to it or sell. So
although we could always use that money to do something else. So, but are you implying that it's fully valued now, therefore not hot at this present instant?
That's basically what I'm saying.
Okay, that puts me in a difficult position. I think I'm going to go hot anyway, just because I think overall the market's a little bit floppy, and this is not a good time to be selling. But that was an interesting conversation.